Hello and welcome, ladies and gents, to week 39 of How's the Solihull Property Market, Dom. It is the 1st of October as I'm sat here on Sunday morning, so it gives me a great opportunity to review the month of September. And what does September look like in the patch that we cover? I've said this before, and for anybody that's listening to this or watching this for the first time, the core area of our business covers the postcodes from B90 through to B95. It's where about 80% of our current business is undertaken. And as a result of that, I'm able to give you a real open, honest and transparent overview using all the data and statistics collected via Rightmove and afforded to us as agents that obviously subscribe and use Rightmove. This does take into consideration everything that happens within those postcodes very specifically. I'm going to start, as I always do, with stock levels, number of new instructions, etc. that have come to market. For me, the big standout statistic this week is that there is the continued rise in level of properties that are available, and indeed the shortfall in sales that have been agreed. So if we look at a year on year for the month of September, this September there is 39% more stock available in those postcodes than September of last year. And that volume, ladies and gents, is 1,754 available properties. With regards to sales agreed, they are down 21% year on year, 255 this month and 321 last month. So again, that increase in new instructions, decrease in sales agreed shows that the availability of stock is really having a detrimental, or is having an impact on the market and indeed on the decision making within the market. New instructions remain pretty much similar. They're 2% down this month from 395 last year to 387 this year. And then again, a statistic that isn't going to blow your mind, but if you have been watching this all year, I'm sure you'll be predicting it. Price reductions, they are up 81% year on year from 149 in September last year to 269 in September of this year. For me, I've been speaking to, people across the teams, Anne, Matt, Peter, Lisa, Rav. They've all had their input this week. And indeed, it's interesting listening to them because as an agency, we operate across such a wide or varying price brackets, from really as at the lower end of 150,000 all the way up to the many millions. But really the bulk of our business sits between sort of 400,000 and 1.5 million. And within those markets, within those slightly different areas and postcodes, you do feel changes very differently. So the opinion and views of the sales team in Solihull, for instance, can vary and differ to what the sales team in Dorridge is feeling and hearing. And the most interesting part of that this week that I've felt, or certainly have taken from them, is the fact that the Solihull team believe that there remains lots of activity within the market. However, prospective purchasers very hesitant to make offers. Sorry, done that the wrong way around. The Dorridge team this week, lots of activity in the market, but buyers very hesitant of putting offers in because they feel like it may well either be insulting, or that actually they're more inclined to wait for the property to reduce until they come forward with an offer. The other, the flip side of that from the Solihull team is that actually they're seeing, again, lots of activity and lots of what are being deemed or referred to as very cheeky offers. People that are looking at houses at 350, 400 are not ashamed to be coming in with offers at 300 or 350. That's as a result of really, I think, understanding the changes in the market. I think that there is definitely, we know that it's a buyer's market, but we know that property that is priced correctly will sell. Pete carries out a lot of the valuations for us in the Solihull office. Pete very interestingly pointed out that he finds his conversations with prospective vendors much easier now. They're almost not forgiving, but understanding that the majority of the market has seen inflated asking prices and that they have to correct themselves before the market starts moving again. The mortgage rates, or the Bank of England base rate that was held last week, has had a little bit of positive momentum. The mortgage markets have started to come down and price products sub 5%. So all in all, I think it's quite interesting. At DM & Co, we haven't had the best of months, if I'm completely honest with you, which I always am. September for us, we didn't see that September spike. The only sort of takeaway that, or I say positive takeaway that I can take from it is that with my visibility across the whole market, it's in line with the performance of the industry as a whole across this marketplace. We did still manage to register 251 buyers this month. We've carried out 90 valuations, put 31 properties to market, carried out just short of 400 viewings and agreed 17 sales. That's the disappointing stat for me, only agreeing 17 sales this month. I would have expected it to be up there at sort of 25 to 30, but that does just tell you how, not painfully slow, that's unfair, but how slow this market is at present. And really encouraging people that if they do like properties that they're out there viewing or would like to take a look at a property that perhaps they had previously discounted because of price, please come forward. There's no shame in putting an offer forward. And of course, it's a starting point, so it gets the ball rolling. And yeah, on the whole, the majority of our clients are very receptive and wanting to move. So if I can help you at all, please do get in touch. Notice this is now just over 6.5 minutes. So thank you if you have stayed tuned in for this long. All the best. Bye-bye.